Welcome to the Edmonton housing market update for September 2023. We're going to be looking at a whole bunch of stats from the Realtors Association of Edmonton. We'll look at what's going on in the market as a whole, the single family home market, townhouses, duplexes, apartments, and then at the end, we're going to look at benchmark prices for these different property types as well. So if you're looking at buying or selling in the next year or so, you'll definitely want to check out the rest of the video. All right, let's jump right into it. Let's start by taking a look at the market as a whole. So total residential, that includes all property types, detached homes, condos, townhouses, everything is included in this. So we're still sitting technically in a balanced market with an absorption rate of 32.88%, which is actually up a little bit from last month. It was sitting at just over 31% for the month of July. So it bumped up slightly, but not a significant change. The average price in all of Edmonton was sitting at $382,255, which was down just a little bit from July, but up 2% from August 2022, which is a little bit interesting. Now, in terms of the inventory and how many sold properties there was 4,884 active listings at the end of the month, and there had been 1,606 sales. So the inventory was down 4.7% from July. So if you were hoping to have more options, if you're out buying, the number of total options is actually starting to dwindle a little bit, and that's down 18.99% from August of 2022. So same scenario if you watched my last update, that we're still seeing a significantly less inventory than we did this time last year. The number of sales were up 1.01% from July, which is interesting. You wouldn't expect there to be more sales in August than July, but we were up a little bit, but relatively comparable. And the sales were up 32.18% from August of 2022. So quite a few more sales than what we saw in August of last year. Interest rates are still really high, but I guess maybe people are used to the higher interest rates, so it didn't hurt the number of sales as much as it did last year. Now, average days on market was sitting at 47 days compared to 46 days last month and 44 days last August. So even though there's a few more sales, it is taking a few more days on average for most properties to sell. And then in terms of market distribution, this is what price range the properties fall in and what percentage of the market is in each segment. Below 200,000, we had 19.23% of the market, just over 17% of the market between 2 and 300,000, and just over 24% of the market between 3 and 400,000. So market as a whole, that's the biggest segment. And then between 4 and 500,000, there was 18.61% of the market, and just over 10% between 5 and 600,000. Just barely over 5% between 6 and 700,000, and about 2.3% between 7 and 800,000. After that, there's just over 1% between 8 and 900,000 and less than 1% in each segment after that, unless you include 1 million to 1.5 million, where there was 1.02% of the market. Now let's look at everybody's favorite market segment, or at least it seems like it, detached homes. So detached homes were sitting at an absorption rate of 31.32%, which is right on the cusp between a buyer's market and a balanced market. It did drop a little bit since July when it was sitting at 39.25%. So a bit of a shift there, a little bit more comparable to the June balance. So we've kind of had a little bit of ups and downs in terms of the balance of the market, but nothing too crazy. Basically just making it bounce back and forth between being right on the line of a buyer's market and being balanced. But this was a significant drop, going from almost the middle of a balanced market to just barely a balanced market if you're looking at a market as a whole. Of course, there's going to be different segments within that. This is generalized. If you do want to get specific insights that would help you on your search to buy a home, I do recommend reaching out to me. You can go to booktrevornow.com. You can select a time on my calendar and then book a free strategy call with me. Ask me anything you want for 30 minutes and I'll just help you as best I can. Basically, I do this for free because I know there's a good chance if I give you good value on that call, that when you are ready to buy a home, that you'll decide to work with me as your realtor. So go to booktrevornow.com and you can get your free strategy call. So looking at the average price, so average price for detached homes was sitting at $492,155, which is up 0.36% from July and up 2.72% from August 2022. If you look at it on a yearly basis in 2023, the prices are still down 1.63%, whereas in 2022 they were up 4.96%. And then in terms of actives and solds, at the end of August, there was 2,727 active listings and 854 sales. Inventory for detached homes was actually up 24.75% from July, so different story here than the market as a whole, and down 28.91% from August of last year. So even though we're still significantly down in terms of inventory for detached homes, it was actually bumping up quite a bit from last month. So we got some new detached homes on the market. Now, in terms of sales, they were down 0.47% from last month, but still up just over 30% from August of 2022. And that basically, for me, explains the change in the balance of the market. We see a 24% increase in inventory, and the sales were pretty much the same as they were last month. So if the sales stay the same and you have more inventory, that's going to affect the balance of the market. And that's why we dropped from that 39% absorption rate to just over 31%. So that explains that for you. Now, in terms of average days on market for detached homes, it was sitting at 44 days versus 45 days last month and 39 days in August of last year. And for the market distribution, almost nothing under 200,000, but there is 1.37% of the market there, just over 9% of the market between 200,000 and 300,000. Pretty tight in that price range for detached homes for sure. A lot of them need work, and the ones that don't or are in better shape usually sell pretty quickly. If you're expecting prices to drop and you're looking in one of the bottom segments of the market, I think that's probably less likely unless the properties do need significant work. But if you're trying to get a property that doesn't need work and you're looking in the bottom 10 or 20% of the market, I would expect those properties to have the least amount of downward pressure on prices just based on the affordability factor. You're already looking at the cheaper stuff. It's got a long ways to go before I would see those properties having downward pressure on their prices. So just a side note there for you. And then between 300,000 and 400,000 was 26.43% of the market. And then the biggest segment was between 400,000 and 500,000 with 27.55% of the market. Then just over 17% between 500,000 and 600,000, 8.7% between 600,000 and 700,000, and 3.9% between 700,000 and 800,000. Then you got 2% of the market, or just over, between 800,000 and 900,000, and 1.12% between 900,000 and $1 million. Then you're getting into pretty big numbers after that. That's it for the detached market. Later on, we're going to look at benchmark prices, which I do like more than the average price metric. The average price metric can be, I don't want to say manipulated, but influenced by either higher priced properties or lower priced properties selling. It doesn't really give you a good view of what's happening to a typical property, whereas benchmark price is going to be using a very specific description for that type of property, whether it's a 2-story home, an apartment, or a townhouse, and how that property value is changing on a monthly basis. So we're going to look at that towards the end of the video, so make sure you wait till then. All right, now for semi-detached market. So this is basically going to include half duplexes. So that's when you're connected to one neighbor on one side. It's still a single family titled. It's not going to be a condo, so it's still single family titled. So a lot like a single family home, except you're connected to somebody on one side. This market is still sitting at a weak seller's market with 51.57% absorption rate. The average price was sitting at $376,974, which is down 1.26% from July and up 3.64% from August of last year. It's a pretty small market compared to the detached market. At the end of the month, there was 351 active listings and there had been 181 sales. So let's see, you can see that balance there. A lot of my stats here are kind of screwed up because it's a new thing that the Realtors Association did, and I haven't gotten all my infographics updated. So the other thing I'd quickly look at is just the average days on market sitting at 46, which did creep up from July. And then the market distribution, biggest chunk is between 300,000 and 400,000 with 42.77% of the market. Then the next biggest chunk is almost 26% between 400,000 and 500,000, and then just over 19% between 200,000 and 300,000. So that's the biggest chunk of the market. You'll still find some between 500,000 and 600,000, just over 6% of the market, but pretty small segments everywhere else. All right, now we'll look at row/townhouses. So this will include what's called residential attached, which is a single family home titled property, but you're typically attached to more than one neighbor. You could be an end unit and just be attached on one side, but there's usually at least 3 or 4 units in this type of housing. And then townhouses, which are condominiumized townhouses. That's a much bigger part of the market, but it's kind of all lumped together here in this new category. That's also sitting at seller's market territory. It jumped from a 38% absorption rate to a 54.23% absorption rate in August. Average price was sitting at $250,360, which was down 2.18% from last month, but up 2.57% from last year. And then in terms of actives and solds, there was 520 320 active listings at the end of the month, and there had been 282 sales. So the actives are down just under 7% from last month, and the sales were up over 30% from July and over 60%. I would ignore the August 2022 number because that's probably screwed up. But just looking at it last month only, we saw a pretty big increase, a 30% increase in number of sales for townhouses and row houses. Average days on market was sitting at 43 days versus 40 days last month. And you can see the vast majority of these are all under 400,000. Biggest segment just barely was under 200,000 with 35.28% of the market, and then 34.93% of the market between 200,000 and 300,000, and then still a pretty big segment between 300,000 and 400,000 with 25.64% of the market. All right, and last but not least, unless you mean least exciting, is the apartment condo market. It's still sitting pretty much smack dab in the middle of a buyer's market with 19.85% absorption rate. That's been relatively stable for all of the last year. If you look at the infographic here, it's bounced around quite a bit, but not a ton. That's probably not a good way to describe it, but it's stayed in a buyer's market for all of the last year. It would be the main takeaway there. Average price was sitting at $189,505, just down 1.8% from last month and down 0.39% from last year. There was 1,456 active listings at the end of the month, and there had been 289 sales. So the listings were down 5.39% from July and down 40.86% from August of last year. And then the sales were down 12.95% from July and up 21.43% from August of last year. So still more sales than last year, but it's dipping now that we're going into July, which was the case for most segments of the market, but there were a couple surprises there, as you saw earlier. Average days on market for a condo was sitting at 58 days versus 60 days last month. And the vast majority of the market's under 200,000 with 67.16% of the market there and 23.83% between 200,000 and 300,000. And then after that, there's only 6.42% between 300,000 and 400,000 and very little at higher price points. All right, now let's take a look at the benchmark prices. For the single family homes, the benchmark price was sitting at 443,000, which was up 0.3% from last month, but down 2.6% from last year. I tend to give this one a little bit more weight. So that's showing that overall prices for single family homes are still down from this time last year. Did creep up a little bit from last month, but not a huge change. For apartments, the benchmark price was sitting at 176,000, which was up 0.9% from last month and down 1.1% from last year. And townhouses, the benchmark price was sitting at 228,000, which was down 2.1% from last month and down 5.4% from last year. That's probably the most surprising one. I'm not really sure why the benchmark price is down more for townhouses, especially given what I showed you earlier with that being a relatively tight market. You can also see the benchmark price trend here. For the market as a whole, the benchmark price was 372,000, which is no change from last month, but down 3.9% from last year. You can see that we did drop, I think it started in July of last year, but if you look at this, it shows basically dropping from August of last year, bounced kind of along the bottom in January, and then we had some decent gains in the earlier part of this year. Now we're sort of going sideways, and we'll have to see what happens as we get further into the fall months. For me, I think this is the big story of inventory levels versus interest rates. If we had higher inventory levels, I do think prices would be falling by now or would have fallen more. But since inventory levels are relatively low, the higher interest rates are not enough to bring the prices down. With that said, it was interesting that we saw an uptick in the single family home market inventory levels this month. If that continues, that could cause a bigger shift in the market moving forward. So we'll have to see how that unfolds as we get further into the fall months. Anyways, I hope you got value out of this market update for September of 2023. Make sure to like and follow if you want to watch more videos like this. If you click over here, you can watch another video, and if you click over here, you can subscribe. All right, thanks so much for watching.